Hey guys, wonderful day again today, and building on some of the progress learned from IndusInd Bank's poor performance, I wanted to learn upon the banking industry by picking up another poorly performing bank. And I had to go nowhere because I just picked up another poorly performing bank, which was Yes Bank. There are about five or six poorly performing banks in the Indian industry. Sorry. One of them would be Yes Bank, IndusInd Bank, Indian Overseas Bank, IDBI Bank, IDFC First Bank. I think sort of like moderately performing, and I think I picked up Yes Bank partly because I have a stake in it. So I want to make sure that you're aware that I have some kind of skin in the game. So there's a little bit of an emotion when I'm trying to deliver the management related insights that I'm giving you right now. So for any bank, you need to understand there are four related buckets. The first would be advances, which would be loans. The second would be deposits. The third would be asset quality, and the fourth would be profitability. For any bank, poorly performing bank, or any really established bank as well, poised for kind of growth, all kinds of growth, these four buckets would be extremely important: deposits, loans, which would be advances, asset quality, and profitability. If these four buckets are not performing as per the required margins, the bank would not be entertaining a lot of interest from the shareholders and the board and everything. I think the bank will royally collapse. And we've got plenty of examples like that, and I want to cover a lot more of those examples because the public sector banks are there are plenty of examples in the public sector banks. So moving on, I was pleasantly surprised when I was reading upon the management related con call, which was released the previous month, which was held by the Yes Bank Authority, because in these four buckets, Yes Bank was performing exceptionally well in all these four buckets. With regards to the advances, they were really good with it because they were able to increase their numbers, increase their loans, increase their advances to the customers, to retail customers, to commercial vehicle customers, to commercial equipment customers as well. And because they were able to increase these numbers, my judgment is that there's a growing positive sentiment that they can lend from Yes Bank at a very competitive interest rate and make sure that they can also pay it back. So I think Yes Bank is being very, you know, cautious before they're trying to lend, because that based on their previous historical experience, you would notice that sometime around 2020 the bank collapsed largely because it was aggressively lending against a lot of corporate entities and real estate developers as well, and for which reason the bank collapsed royally. So I think they're being very cautious with whom they're lending in terms of the advances. The second bucket would be deposits, and I think I'm very happy about the deposits aspect because their CASA ratio, which would be the common current account and the savings account ratio. So when a bank is saying that their CASA ratio is improving, you need to understand that the depositors or whoever the consumers of the bank are very comfortable in holding their money in the bank. So to develop that kind of confidence, to develop that kind of leverage with the bank, it takes a lot of selling by the bank, a lot of confidence to build upon by the bank to the consumers, just to make sure that the CASA ratio is maintained. And within the CASA ratio, the second part of the ratio would be the SA ratio, which would be the savings account ratio. If you notice, in India, the current accounts, you'd not get any interest rate for current accounts. For savings account, you'd get anywhere between 2 to 4%. Now, with the savings account, this forms like this. This is a kind of like a cheap kind of fund. It's a cheap fund. It's a cheap cost of. It could serve as necessary money for the kind of loans they're dispersing in the first segment, as I mentioned, towards the advances, which they were doing very well. And the third thing would be wholesale deposits and wholesale term deposits and everything. And these would be the relatively more expensive accounts for the bank, because that would be the interest rate for these accounts would be anywhere between 8 to 9%. So a bank is not very motivated to increase their term deposits for the consumers. They want to make sure that the CASA ratio is exceptionally maintained well, just to make sure that they can get cheap cost of money, just so that they could lend it to the loan bucket as well. They could directly lend it towards the loans and advances to much more, riskier consumers and stay more profitable. Brings me to the which brings me to my third bucket, which would be asset quality. And what do I mean by asset quality? It's that a bank is very, very motivated to make sure that poorly performing assets or non-performing assets are not existing within a bank. Just how do they calculate this? It would be the net non-performing ratio, which would be NNPA, and GNPA, which would be the gross non-performing ratio. They want to make sure also to make sure that the provisional coverage ratio would be very high. And for both these numbers, Yes Bank has been performing exceptionally well in this quarter, and they've been able to reduce their NPAs, which is a very good sign. They've been able to increase their provisional coverage ratio, which is also a very good sign, because that just shows that they've been very prudent in maintaining their asset quality, just to learn based on their previous experience of having collapsed so tremendously in the last 5-6 years. And they're only right now slowly being able to grow back in stature, what once Yes Bank was back in 2019 or 2018. The fourth bucket would be profitability. And I think in both these metrics, there are two metrics which I want to cover, which in profitability, which was net profit and operating profit. And in both these profit measures, they were able to perform really well. So all in all, I think in all these four buckets, advances, deposits, asset quality, and profitability bucket, all these buckets, they've been really well. And I think what makes me really more bullish about this particular bank is their current tie-up with SMBC Bank, which is a Japanese bank. And I just had a look at the name of the bank, which was Sumito Mitsui Banking Corporation. So they have about 24% of stake in the bank, which shows that, by the way, previously SBI had the biggest stake within the bank, and they sold about 13% of that stake to this SMBC Banking Corporation, which shows that a Japanese banking corporation is showing interest within an Indian banking entity. They are showing interest in Indian banking equities and Indian banking interests. But at the same time, Yes Bank is sort of piggybacking on SMBC's global corporate entities. They will be able to access a global sense of consumer base, a global sense of working systems. So for an Indian bank to be able to explore global consumers and global audience, it's unprecedented, what I want to say, because previously I don't think any other foreign bank, I think another Singaporean bank was able to command this kind of control with an Indian banking entity. But only after that, a Japanese bank, which is a foreign bank, is able to command that kind of entity right now within an Indian banking corporation. And for all of these reasons, I'm very, very bullish about this particular stock and this particular corporation and this particular business. And I'm very, very glad to say that I'll be continuing to invest or even hold the stock just based on the current management con call report. Until next time.